Startups Weekly, Asana numbers likely to be what the market wants. Editor's note: want to get this weekly review of news that startups can use? Just subscribe here. Asana may get more attention than the average SaaS company due to the Facebook pedigrees and outspoken views of its founders, but in practice it's a low-profile, cash-efficient machine. Today, the productivity toolmaker does not need to raise cash via a traditional IPO, as we explored this week following its filing for a direct listing, even though it hasn't raised that much money compared to other unicorns. Alex Wilhelm dug into public numbers on TechCrunch to make an educated guess about its pricing prospects. Let's presume that Asana crossed the $100 million ARR mark as 2018 came to a close. And, for the sake of discussion, that its 8 quarters of revenue growth acceleration left the company with a 60% expansion rate. Then, Asana would have closed up 2019 with $160 million in ARR. You can easily change up the numbers by tweaking when the company reached the 9-figure ARR mark and its ensuing growth rate. Asana is likely worth more than its final private valuation of $1.5 billion. Presuming it can get a bog-standard 12x multiple on its ARR, the company would be worth $1.8 billion. If it can do better, or is larger than that, the value of the firm quickly rises. Unlike Casper's struggles, and One Medical's somewhat surprising consumer e-pop, Asana is a straightforward bet for a good public performance based on traditional SaaS metrics. Stay tuned for more next week. VCs are still pouring money into open source. In this week's investor survey, Armand Tobitabai talked to 18 of the most active and successful investors in open source and DevOps software about the latest trends. The money going into the sector has grown by 10% CAGR over the last 5 years, and nobody he talked to plans to slow down. In fact, many said the market was underheated, or just halfway there. Why? Every company is trying to become more of a software company. Developers now get to make more adoption and purchasing decisions, and there are countless software problems yet to solve. The investors in part 1 of the survey on TechCrunch: Vas Natarajan, Acel; Stephanie Zan, Sequoia Capital; Tomasz Tungas, Redpoint Ventures; Deepak Jivankumar, Dell Technologies Capital; Anna Khan, CRV; Peter Levine, Andreessen Horowitz; Ilya Kurnos, Signal Fire; S. Samarsagar, Madrona Venture Group. The investors in Part 2: Gaurav Gupta, Lightspeed Venture Partners; Julia Schottenstein, New Enterprise Associates, NEA; Peter Sansini, New Enterprise Associates, NEA; Salil Deshpande, Uncorrelated Ventures; Ethan Kurzweil, Bessemer Venture Partners; Saqib Dadi, Bessemer Venture Partners; Jenny Gao, Bessemer Venture Partners; Mike Driesk, Bessemer Venture Partners; Lonnie Jaffe, Insight Partners; Jai Das. For more on this story, visit the news article link.